So now we're going to go to stocks. So those were your ETFs and your mutual funds. I'm not going to talk about bullion, um, but now we're going to talk a lot about stocks. So we have, these are, GSD is gold stock data. So these are the categories that I created for the website. So we have a major. We're going to talk about each of these categories, the risk levels and what to look for and stuff like that. Majors. So I use a different definition. In the industry. A major, a large cap company is more than 10 billion, but I designate a major as greater than 3 billion. I just think that once a company has more than 3 billion market cap, it's a strong company. So I'm just going to label them as a major. And it works somewhat out. For instance, the industry, the way that they label companies majors, I tend to label some majors that are not. Some people, they're considered mid tiers, but I have them labeled as a major. For instance, Hecla Mining, that's considered a mid tier in the industry, but their market cap is over 3 billion, so I have them currently as a major. Um, so that's kind of the difference. Emerging majors, for me, an emerging major is a market cap between 1.5 billion and 3 billion. And then a mid tier, this is the only category that's kind of loose for me. What I mean is loose is that I could put companies in here that maybe people don't think that are mid tier. So I have market cap 300 million to 1.5 billion. That is just a kind of a generalization because I go lower than 300 million, or it has production greater than 800,000 ounces, or silver greater than 3 million. So this is this or. So there's a lot of companies that have 880,000 ounces of production, but their market caps are less than 300 million. And I go ahead and label them that because if the price of gold or silver goes up, they're going to have a lot of cash flow and it's going to be a strong company. Then I don't consider them a junior. So then all these J's, these are the juniors. So I've broken juniors in all these different groups. So J, emerging mid-tier. So production is forecasted to exceed 80,000 or 3 million in the next 3 years. So here I'm not looking at market cap. I'm just looking at forecasted production. And these are existing producers. So these aren't small producers. These are producers that are going to grow their production. Small producers is a producer that does not qualify as an emerging. So, and then from here up, these are all producers. And so we have a small producers, and then we have small producers that are basically going to, I think, going to turn into a mid-tier. Then we have a near-term producer, and these are companies that I'm forecasting to begin production within 2 years. Late-stage development, again, I'm forecasting them to begin production within 3 to 6 years. This is a little, I said that mid tiers is the only one that's kind of loose, but this one here, I could go all the way out to 7 years, but I don't do it very often. It's usually I like, it says within 2. So yeah, if they're not going to be in production, this is kind of the, most of the late stage companies that I have in there should begin production with 3 to 6. Some of them won't make it, if you will. I'll put it that way. These next 2 categories I don't use that much. I created them, but I don't use them. These are companies that are not exploration. These are not project generators. So these are development companies that are not late stage. So if I have a company that they basically call themselves development, but they're not late stage, then I'll stick them in one of these. There's not a lot of companies that kind of fit that. And it really comes down to how much resources they have. If they have a lot of resources and practically no resources, then I'll stick them here. Or or I might put them down here in potential exists if they don't have any resources and they call themselves a development company. But these are kind of outliers. Most of the stocks don't fit. You don't see a lot of these, and you don't see a lot of potential exist. The big category is your exploration company, which I call project generator. And the reason why is because they have no plans to mine gold. All they plan to do is basically find gold in the ground and then sell that property or option it out. And so they're trying to create projects. They're trying to create mines, but they're not going to mine it. So they're project generators. I consider a mine, basically a project because you have to develop the mine. And then the last one is the royalty company. And I have here owns royalty streams, but that could also be an NSR, um, which you could consider a stream. But now a lot of the lingo is you wouldn't necessarily call an NSR a stream. A stream is more as if when you loan money out and then you get paid back through some of the gold that they produce. That was kind of an income stream, a royalty stream. Um, Whereas an NSR is when you have a percentage of the gross revenue. Like can go all the way down to a 0.5% and all the way up to like 5%. The average is about 2%, 2% NSR. So if you get 10% gross revenue, it's a pretty good income stream depending on how much revenue there are. But royalty companies, we're going to be talking about those.